This video reflects my personal opinions only and is for educational purposes. It does not constitute any investment advice. All investments involve risk. Please assess carefully before making any investment decisions. Hello everyone, I'm Funman101. Today, I want to share my thoughts on recent oil price movements and what could be President Trump's potential strategy in an Iran war scenario. This topic matters to a lot of people, especially those who care about oil prices, inflation, and geopolitics. Let's break this down step by step. First, in the short term, war always creates uncertainty, and uncertainty naturally pushes oil prices higher. When conflict breaks out in the Middle East, markets immediately price in risk, even before actual supply is disrupted. As a result, crude oil rises and energy stocks often move up as well. That part is straightforward. However, if the war ends quickly, that risk premium could disappear just as fast. When uncertainty fades, oil prices often return to previous levels instead of staying elevated long term. So short-term volatility does not automatically mean permanently high oil prices. After the initial shock, markets usually stabilize. Now let's look at a real example, Venezuela. After US intervention and sanctions enforcement actions, the US gradually gained control over aspects of Venezuela's oil export channels and tanker shipments. In one notable case, US authorities sought legal forfeiture of an oil tanker and approximately 1.8 million barrels of crude oil. The oil was then managed under US jurisdiction. More importantly, these oil cargoes were later redirected and sold into markets such as India, sometimes at discounted prices. Through legal, financial, and logistical control, the US was able to influence how Venezuelan oil entered global markets. This shows something important. Energy policy today isn't just about drilling. It's about control over distribution, sanctions, shipping, and pricing. That's strategic leverage. Now let's apply that framework to Iran. If a war were to end, and the US supported a new pro-US Iranian leadership, sanctions could potentially be eased. If that happens, Iranian oil exports to Europe and possibly even the US could increase significantly. And if supply increases, oil prices would face downward pressure. At the same time, Europe could reduce its dependence on Russian oil. That would indirectly weaken Russia's oil revenue. Since Russia relies heavily on energy income to finance its war in Ukraine, lower global oil prices could reduce its financial capacity to sustain prolonged conflict. In other words, expanding Iranian supply could both stabilize oil markets and indirectly pressure Russia. This is where the idea of strategic alignment comes in. Now let's think about the broader economic impact. Controlling supply from Iran and Venezuela doesn't just affect geopolitics. It affects everyday life. If oil prices remain low, gasoline prices decline, transportation and logistics costs fall, businesses face lower production expenses. For consumers, that means lower daily living costs. For companies, lower input costs can improve profit margins and support investment confidence. For investors, reduced oil-driven inflation lowers inflation expectations. And when inflation pressures ease, capital tends to flow more easily into equities and productive economic activity. Lower energy prices often translate into broader economic stability. So, to summarize, yes, war can push oil prices higher in the short term. But over the long run, policy decisions and geopolitical arrangements matter more than initial panic. If US strategy results in increased Iranian oil supply, reduced Russian oil revenue, lower inflation pressure in the US and Europe, then this could function like a three birds with one stone. Scenario: lower oil prices, weaker Russian war financing, reduced inflation in Western economies. Of course, this is a strategic interpretation, not a prediction. Geopolitics is complex and outcomes are never guaranteed. But when analyzing oil markets, it's important to look beyond the immediate headlines and think structurally. So there's no need to automatically assume oil prices will stay high forever. Policy decisions and global supply dynamics can change the direction. Let me know what you think. Do you believe oil will remain structurally high, or could geopolitical strategy eventually push prices lower? If you enjoy macro strategy and long-term analysis like this, consider subscribing. Thanks for watching. That's all for today's sharing. If you find this video helpful, you're welcome to join my WhatsApp community by scanning the QR code on the screen. I share my latest market views and updates there from time to time. You can also follow my Facebook page where I post all my content and updates. I'm Funman101. Thanks for watching, and I'll see you in the next video.